Good Thursday afternoon to you. Welcome to the John Sanchez Show on Newstalk 780 KOH. It's a pleasure to be with you and a pleasure, ladies and gentlemen. He is back, full flesh. Cory Edge of Realty. How you doing, Big C?
I'm doing awesome, sir. How are you?
Fantastic, man. It's great to see you. Great to be
You
back
too.
with you. And
Absolutely.
we always miss you. Always
Good.
miss you. Dwight is under the weather, which Cory and I were chatting before the show started. Quite unusual. But yeah, wish him a speedy recovery, whatever he may have. How you been, man? How you been? How's business? How's everything been?
It's good. It's kind of, maybe we'll get into it a little bit next week, but I've always said the peak of the market is July 4th. So we're right at that kind of time.
You're at the apex, huh?
Yeah. Not that it falls off dramatically after that, but things will start slowing down after that if they stay to the historical pattern. So it's busy everywhere. I mean, the 100-degree weather doesn't help anybody that's outside, but I guess you just got to get through it.
We feel for our construction workers.
Oh,
man. That have to work
yes.
outside. They
absolutely
earning every penny out there. They
yes.
really are earning every penny. All right, my friend. Well, good. Glad to have you back. And today's topic is obviously designed for you. Let me tell you, everybody, what we have after I give you the stock market recap. Not going to spend a lot of time on the market today. Kind of, unexciting to say the very least. It's like, man, when there's no war going on and oil prices, Cory, moving $5-10 a direction, it's like, okay. And I think also, I can't believe that next Saturday is going to be the 4th of July. Market is going to be closed next Friday, and we all know how this goes. Cory and I were chatting about this. You get into this holiday week, and everyone's out of town, and so on and so forth. So, yeah, who knows? Probably not a lot of activity next week, and tomorrow, thank goodness, is Friday. But anyways, all right, let me tell you what we have lined up. This is something we have not discussed in probably years. And what we've titled the show today is Fix It and Flip It, the truth about making money in real estate, flipping properties. Now, for those of you that may have done this, or maybe it's something, like you always say, Cory, that Saturday night infomercial, which you don't see many of them anymore, or any of them, matter of fact, that 11, 12 o'clock or 3 o'clock in the morning infomercial about how easy it is to make money flipping homes and renovating and so on and so forth. I loved your stories over the years when that was, very popular. But we're going to bring back this. And back to my point. Flipping homes can be one of the fastest, I guess, one of the fastest ways to build wealth. Or it can be one of the quickest ways for you to lose money. Today, we're going to be discussing the best market conditions for flipping homes. How to finance a flip. So we'll do the best we can without Dwight. The biggest mistakes that Cory sees investors making, and whether today's housing market, the real $1 million question, whether today's housing market presents opportunities or danger. So Cory, I've got to tell you, I've got a vested interest in this topic. It is something that has always fascinated me. I know you have made a lot of money over the years doing this professionally for clients and for your investment group and so on and so forth. And to me, it's almost an art, right? What you have gone through over the years when we've had this topic, and like I said, it's been a long time since we discussed it. But I'll use the word, the systems that you have in place to do this, where the novice investor says, "Oh, look at this house is $500,000, but man, last sale in the neighborhood was $620,000. I'm going to jump all over this thing." And the emotions get in place, and they go, "Yeah, I can get in there and put a little elbow grease in and flip this thing, make a couple $100,000." You, on the other hand, as a professional, you go, okay, wait a minute here. Let's slow down a little bit. Let's have a list. Let's have a process. Let's have our team in place to get this done to assure the best odds that are there. Correct?
Correct. And, a lot of it goes into, I guess, just history, experience. If in your example, if you have the opportunity to buy a $500,000 house that's worth $650 or $700, there's a reason for it. And if you don't know what that reason is, then you need to tread very lightly, because in most instances, most people aren't going to do that unless there's a problem.
Yes.
And sometimes I don't think it's greed, John, but I think it's just human nature. Jump on. Sure. I mean, everybody sees
deal of a lifetime.
Everybody sees the dollars, but they don't, what I always did when we were really deep into it was try to look at the downside. Like, what is the worst thing that can happen? And if we can live with that, then let's do it. And we'll get out if we have to.
So, and folks, then that's a professional attitude right there. That's how the professionals do it. Yep.
Yeah. And whatever the upside is. And we've done, I'd say over the last 12, 13 years, 500 houses, 450 houses, somewhere in there. And so in some of them, we've made very little money. Luckily, we haven't lost money on too many, but most of the time, the profits you see on TV, at least in my experience, like we've had a couple massive home runs, but by and large, they're 10% returns, 12% returns, 15%. You know, it's
Right.
turning the money over versus hitting the home run.
Yes.
The other interesting thing, though, I tell people, and if you think about it, there's a lot of risk, a ton of risk,
Oh, a ton.
all this stuff. But if we would have bought maybe 20% of those homes or even less, boarded them up, you know, 12, 13 years ago, never touched them and opened them up this year and sold them, we would have made just as much money with no risk.
Yeah, but the time value of the investment money tied up into there, though, right?
That's true, but it's also I think a lot of people gravitate to the flipping part because it's exciting. It's you know what I mean? It's the thrill of the hunt, and there is a value
Cory,
to that. But
as you know, I've never done a flip in my life. Obviously, you've studied it and watched it a lot, and between clients, and you know, again, I'm a victim of watching the shows and so on and so forth. But it seems to me, and I hope you go into this today, it seems to me the pressure that you are under, right? A lot of times you're borrowing, a lot of times it's hard money. So you have, 3 months, 6 months or something like that to pay it back. You've paid points up front to borrow that money. Usually a bank is not going to lend it to you. You're going to go again private, but you're under these extreme deadlines, right? To get that house fixed, to get it marketed, to get it sold, to get that capital back, scrape off a little profit, pay back your investor, and the hopes of doing it again and again and again.
it is a pressure cooker. I'll tell you, the most pressure filled time we had, my partner and I started doing this back, if you remember, after the Great Recession, when the market was still going down. So we would go in, try to find these deals, go in and buy it. And so we didn't have the luxury of the market being stagnant or going up. So the pressure was from both sides. We're trying to keep costs down. Plus, I mean, at that point, the market was going down 1% a month, 2%. Like everything is crushing you.
Catching a falling knife, as we call it.
And so it was very important to know what you were doing and be able to get in and get out quickly. Otherwise, you'd be upside down before you knew it. I mean, there's no way around
exactly. And you never could recover.
Yeah.
Phenomenal. Again, I want you to go into more details about that. The other thing I want to make sure that you touch on is I think that 08, 09 time period you're referring to, I think that was a great learning lesson because we all know, I remember the phone calls we used to get on this show. People that got caught, right? They were getting involved in the flipping because things were going great in the market and so on and so forth. And then they got caught with their pants down, to use an analogy, right? It wasn't their fault as this market conditions changed abruptly. And they'd already bought the house. They've already maybe invested money into the various improvements. So they're into it for whatever, $50,000, $100,000. Then the market conditions change. And we saw a lot of foreclosures. I remember some of those phone calls we got, people literally in tears saying, you know what, I borrowed against my primary home to do this flip. I thought it was going to be great. Cory, John, Dwight, what can I do to get out of this thing? And a lot of times our answer was, unfortunately, there's not much you can do. Like you said, do the short sale, Mr. Caller, do this, do that, and recover. You'll recover from it. But, in those conditions, the way it was, there wasn't much people could do.
No, and it's kind of equated to your world too, where sometimes you've got this great stock investment, but then something happens with the company or the story changes or the CEO isn't around, or then you've got to change. You can't just stick with the same plan of, well, that doesn't matter because I'm still going to make 100,000. And I had a quick funny story. I had a gal that worked for me forever, and she had been in the business a long time. And she came to me when all this was happening back in 2008, 9, somewhere in there. And she was in tears. And I'm like, what's going on? She's like, my house is worth less than what I owe. And I go, yeah, it's happening a lot. And she goes, I didn't know real estate prices went down. I'm like, well, unfortunately, like, we're not old enough to have really lived through it that much, but they go up and they go down.
Yeah. What do you know?
And she survived and it was great, but it just was an eye opener. Like, yeah, a lot of people thought this could never, ever happen.
Was she licensed?
She had been licensed with me for a long time. And she still is today. And she's a great gal and she knows what she's doing. But I think there's probably a lot of younger people that are in the market now that own homes that have the same thought process because all they've ever seen.
I see in the stock market every day, Cory.
Is prices up.
Yeah. It's in the stock market every day. And I was so funny you bring that story up. I was having this discussion with a client earlier today, and she's about my age in her early 60s, and I was talking about again, we went back to the .com era and how, again, when the market fell in 2001, you take that to 2010, and the S&P didn't gain anything. It was like a fraction of 1%, right, for 10 years. And the younger generation does not remember that, right? Everybody probably, I would say, maybe younger than 50 years old right now, They think this is what you're like you said, the market always goes up. And if we do get into problems, oh, the Fed's going to be the knight in shining armor. The Fed's going to come rescue us. So long-term sustainable downturns never happen. Well, I don't have these gray hairs on my head for no reason. They do happen. And you always have to be prepared for it. You always have to be prepared. And just like you're going to enlighten us on, when you get into these flips, again, great opportunity. But I love what you just said a moment ago. And I'm going to make sure when the show goes out on YouTube and Spotify today, we're going to highlight that clip, that what you just said, Cory. And that is, go into it. What is the worst case scenario? If you can live with it, do it. But if you can't live with it, don't do the deal. No matter what the upside is, if you can't handle financially that downside, because Cory and I, and I'm sure many of you have your own stories, whether you're yourself or friends, family that you saw go through this, you can lose everything. You really can, because so many people, right, Cory, so many people borrowed from 401k, like I said, from the home equity lines, whatever they did, they borrowed the money, and that money had to be paid back. So not only did they lose with, just on the value of the home, but they lost with the capital that they invested to do those improvements. Home improvement is not cheap, right? And Cory, I'm sure, hopefully you're going to share some stories like you did in the past, where you get in there and you go, oh yeah, okay, we're going to put some new drywall in, right? We all have this saying in the industry called, put some lipstick on the pig. But you go in there and you start ripping out the drywall, and hey, it's a DIY project. I can put up some drywall. And you get in there and no, we've got termite problems. Well, there goes a delay there, and then an expense. And one thing leads to the other. It's the electrical's not up to code. Or, oh, that great garage that they turned into a living room. Oh, they never pulled a permit on that one. Meaning previous. I mean, the stories, Cory, you could probably write a book on what you want. So,
well,
I
think that goes.
Those are the best learning lessons.
And I think that goes back to the point. If you're getting a fantastic deal, that's great, but just know why you're getting the deal, because there's always a reason, and make sure you can live with it.
Yeah, that's a great point. All right, we come back and give you the stock market recap, and then we're going to get into our topic: fix it and flip it. The truth about making money in real estate, doing the flips with Cory Edge of Edge Realty. Welcome back to the John Sanchez Show on Newstalk 780 KOH with Cory Edge of Edge Realty. And Dwight, a little bit under the weather day, not joining us. All right, we're going to get back to our topic: fix it and flip it. But first, let's tell you about the market. We finished up just modestly on the Dow, a 71-point gain, closing at 51,920. Nasdaq lost 118.46%, and the S&P lower by 1 point to close at 7,357. But I tell you, these closing numbers, Cory, they don't even tell the story. We one of my stock updates this morning, I think it was my 553 report. Nasdaq futures were up almost 800 points.
Yeah, I saw that.
You saw that? Yeah.
Yeah.
It was just amazing. Dows were only up a couple hundred, but it looked like it was just going to be one of these outstanding days. And, hour or two into the trading session, here comes the sellers. They start pounding it, and we end up losing 118. That's the volatility that we live in these days. That's why this market is so very, very hard to predict. Remember yesterday on the show, I told you that we had the earnings release of Micron after the close yesterday, and just again knocked the cover off the ball. Stock held up pretty well today. Finished up $165.05, 15.74% gain to 1,213.56. But we had some weakness in some big names, and I'll tell you that one of the major problems I don't know if you saw this, Cory, with Apple. Yes. Apple kind of started the tech sell-off. Apple came out today and said, look, we cannot absorb this. There's a shortage of semiconductors. We can't absorb the price increases that we as the company are paying. So finally, we have been absorbing them, but finally we've got to pass these on. And Cory, they came out with a list, I don't have it in front of me, of the price increases for MacBooks, MacBook Pros, the desktop models, obviously laptops, etc. Significant price increases. And as soon as that story came out, Apple, which is a Dow component, headed south on us. Stock finished down $17.93, 6.12% loss to 275.15. Worst performance in over a year for the stock. That created a cascading effect. We saw Microsoft, which obviously is involved in computers from the software side of things. Logic was, hey, if Apple's sales are going to slow because of higher prices, then guess what? It's going to happen on the PC side, like Dell's and everybody else. So therefore, Microsoft went down $12.63, about a 3.5% loss. Google was down almost $3, and it just kind of started the whole cascading effect. The bright side was a big, huge move on Caterpillar. Cory and I love this product. $62.38 gain up to a price now of $1,056.83, 6.27% gain. That notched that all-time high for the company, and it was by far the best performing stock within the Dow. So that was it. That was really the highlight of the day. And then we just kind of drifted. We had a lot of economic reports that I'm not going to bug you with, except for Cory. I know you and I we always have some great discussions about inflation. So let's touch on this very quickly before break. So we had the Fed's favorite measure of inflation, the personal consumption expenditure, what we call the PCE. And Cory, to be honest with you, when this report came out at 5:30, I'm sure you probably thought the same thing. This is going to tank the market because this was a nasty inflationary report. Up 0.4% month over month, year over year, up 4.1%. That's the highest level we've seen going back to November of 2023. You strip out food and energy, get to what we call the core, up 0.3% month over month, year over year, up 3.4. So, Cory, here we are sitting, we'll just average it, say 3.5% inflation on the Fed's favorite measure. Definitely, a 1.5, if not more, away from their mandate of 2. Brother, these odds are getting slimmer and slimmer that we're going to get any type of rate cut. And again, the street odds right now, next move out of the Fed is going to be an interest rate increase. And after we got this report, I'm even more convinced of that.
Yeah, and I think everything is, in my opinion, dependent on oil. If oil hadn't fallen where it is now and you would have got that report, the market would have cratered. But I think everybody's looking past it because they're assuming that the oil price probably caused a lot of it. Because even the 10-year's been down the last couple of days. So the market's not really thinking that the Fed's going to do much. I personally don't think they'll do anything. I don't think they'll raise, but who knows? I guess we'll just have to watch the numbers and see, because he was pretty adamant that he's getting the 2%. However that happens.
Whatever the cost is going to be to do that.
Good luck. He's not going to have a job.
Yeah, I keep coming back to it's like, boys, you guys have boys and girls, you've had this 2% inflationary mandate for as long as I can remember. Maybe it's time you adjust that a little bit. I know, was it, it wasn't, it was like a couple Fed members ago, maybe even like Janet Yellen or Bernanke or one of them way back. They had touched on that, like maybe it's time that we kind of look at this. And again, 2%, because you think about it, 2% inflation. If you want a thriving economy, which the problem, Cory, is and I know you agree with me on this, we got this great thing called AI and this technology boom right now. It is, there are job losses, but it is creating so many millionaires and billionaires and so on and so forth. There's a lot of money sloshing around in this economy because of the strength of the stock market, and specifically in that sector. I don't know how they'll ever get to 2%. Right? That was great when we didn't have AI and we didn't have this technology boom. But this technology boom is here to stay. It's not going anywhere. We'll have ups and downs, but long term, it is here to stay. So I don't know. To your point, I don't know how they're ever going to get to 2% in our lifetime.
Well, and I think too, I mean, their blunt force tool of raising interest rates hurts the people that are not spending the money. Does that make sense? Because everybody, not almost everybody you just described, nobody wants higher interest rates, but it doesn't really affect their life too much.
It can change their lives. Yeah, exactly.
But the people it does affect aren't the ones that are, I don't want to say the problem, but they're not the ones spurring the economy, to these crazy numbers. So who knows? They're going to have 9, 10 committees now that are going to make decisions. So maybe one of the new committees will come up with some plan. We'll find out.
Absolutely. Hey, real quick, you know what? I'm going to throw a question at you, and I want you to hit this when we come back. I've been waiting for you to get on the show to talk to you about what's going up in Tahoe, specifically the North Shore. Speaking of the billionaires of the world.
Yeah.
This is something you and I have discussed for so many years, that Tahoe had been a hidden gem, but it is not anymore. It has been uncovered because of the proposed billionaire tax. And so many of these guys, they're not just coming in buying, quote, a vacation home like they used to. They're coming in, they're making, Tahoe on the Nevada side, now they're residents. So I'd love to get your perspective on what's going on there. And then could we see some of that money, trickling down the hill? Let's call it that. And then we'll get into our topic, fix it and flip it. Welcome back to the John Sanchez Show on News Talk 780 KOH. Cory had to duck out. He's got a family event. Told him, get out of here and go get ready for that. So I'll wrap things up. So again, we were discussing fix it and flip it. What Cory and I decided to do is we're gonna really pick this topic up next week on Tuesday when he's back with us, because there is so much to it, and it's a fun topic to discuss. It really is. It's like I said, we've seen a lot of people make money. I have never done it, so I'm not going to claim that I have. But, next Tuesday, we'll talk about what are the best market conditions, right? Do you have to be in an 08, 09 time period to do that? Absolutely not. There's always opportunity. So we'll get into that. We'll get into how do you find the right property, right? You're looking at completely different things if you're going to do a fix it and flip it versus if you're going to rent the property out. Definitely if you're going to live in it, so on and so forth. Hopefully Dwight will be back with us on Tuesday, which is great. And we'll get into we'll get into the financing side of things on that also. There's a real art to this, and you're really going to want to learn about that. And then, what are the biggest risks that's really, like Cory said at the beginning, understand what your downside is before the whole thing starts. And if you know what your downside is and you can handle that downside, great. Take a look at it, minimize the risk, and go for it, right? All right. With that said, I want to get into something else. I told you yesterday, I announced my next webinar for our estate planning business, Specialized Trust and Estate Plans. So I want to have you put this on your calendar. I want you to join me. And I'll be honest with you, I screwed up. I completely forgot that next week is 4th of July week. And I'm sure many of you are going to be out of town. But if you're going to be around, or even if you're out of town, right? It's a great thing about the internet. All you need is internet connection and you can join us. But anyways, what's the title of the webinar? Do you have an estate planning problem? So what I've designed here is a webinar really to educate. They're always about education, but to educate you and say, A, do I need an estate plan? And B, if I do, what are some of the most common problems that are out there? And for those that have an existing estate plan, this webinar is also designed for you because, again, I'm seeing so many mistakes, so many people that think I spent the time, I spent the money creating my estate plan, my trust, et cetera, years ago. Everything is fine. And after we do our evaluation, because we do offer a trust review, we're just finding so many things and they're shocked. They're absolutely shocked. So again, we want to make sure that you fully understand that. So I'm going to be discussing the estate planning self-assessment. Again, do you need an estate plan? What are some of the common mistakes that families make? The probate reality check, right? Even if you have an existing trust, you could still be subjected to probate if things are not set up correctly. How to tell if your trust is outdated, right? It's not just about the date. That's another common misconception I'm going to break. It's not just about, oh yeah, I wrote the trust, 5 years ago, everything's fine. No, there's much more to it than the date. There really is, to tell if your trust is outdated. I'm going to get into one of my favorite areas, which is the asset titling review. So many people are holding assets. They think they have the trust. They have the trust, but assets are not handled properly or titled properly. So we're going to go through that. The beneficiary side of things. Yep. I'm going to show you some ways that people are making mistakes so that you don't, in regards to naming the right beneficiaries and how to name those beneficiaries. I'll wrap things up with the documents that every family should have. And then we'll kind of conclude with some of the next steps. And of course, my favorite very part of every webinar is the Q&A, where I get to answer your questions one-on-one. So I invite you to join me next Wednesday, 6 p.m., July the 1st. Just send me an email. We don't have the automation set up yet. Just send me an email, john@specializedtrust.com, and that's JON. And I will personally send back a webinar link for that. And again, purely educational. We're going to have a lot of fun. We always have a great time on these webinars, and I promise you will walk away with a significant amount of estate planning knowledge. So john@specializedtrust.com, send you the Zoom invite. God bless. Have a great afternoon. That was a lot of fun. We'll see you tomorrow on the John Sanchez Show.